we're going live now, so we are live. So now let me see. Can you go check YouTube to see if we're live on YouTube? Let me check.
Yeah, it's on the Liberty Advisor, right?
Yeah, I just let's see here. So if you guys are joining us, yep, it does show that we are live. So that is
Perfect.
cool. So all right, so maybe that's like the hack around. So right now we are also live on Float, D Live, my Facebook, but I wouldn't really recommend watching this on Facebook. If you are watching this on Facebook, make sure you check out the other channels. But little hack in order to get it working on Float is I turn Float on first, then turn the other ones on. So maybe that's some feedback for Kingsley in terms of how we can get this stuff to work. But anyways, let me get the actual recording of the show going. So as we're building this up, appreciate you guys watching. But let me get the recording going after I cough in 2 seconds here. Coronavirus. It's everywhere. Just got to get rid of that.
You're done.
Just got to get rid of that coronavirus. But, John, you ready to get the show started if we hit record right now?
Let's hit it.
All right. Everyone, this is Tim Picciott, joined with John Snice and the Economic Truth, and today we are back for another Tim and John show. I know you guys have been waiting a while for one of these. It's been about 2 months. A lot of that is my own problem.
Tim is done camping. He's been out camping all the time.
as you're basically camping, right now, pretty much. But yeah, I mean, going back to June 15th, I headed up to upstate New York, visited family up there. Then the day I left New York to go to Massachusetts, they then banned people coming in from Arizona. It was one of the 3 states that got banned coming into New York. Otherwise, you'd have to go on a 14-day quarantine. Then as soon as I left Arizona, they started implementing mandatory masks in Arizona. Then I went to New Hampshire for Pork Fest. That was awesome going up there. Then came back to Arizona for a day or two. Then went to California, left California. The day I left California, they shut down California. And then went out to Anarcho Vegas out there with that crew. Then came back, and after that, went out to Jackalope Freedom Festival. Out in up in northern Arizona, that was about 3 hours away from here, and then we've got Josh and Kingsley coming back here tomorrow. So it's just been a big whirlwind over here. I've been doing lots of work, but also having a good time. Just in the summertime, we've just set records here in Phoenix for most days above 110, most days above 115. Hottest month ever in the history of Phoenix. So, it's just sort of a weird atmosphere. Also in the coronavirus capital of the world, supposedly. So, I mean, if anyone should be, dying of this, it should be the guy that's been gallivanting all around the country, going to all these different events, not wearing masks in the coronavirus capital of the world, Maricopa County. And, we're still here and kicking. But all the while, John's been asking to do shows, and I've just been, not in the right frame of mind to do that. But anyways.
He's been lazy. He's just been bumming around,
just a lazy
and having fun.
Well, someone that's been bumming around for a very long time, if we go to the screen over here, is Mr. Warren Buffett. So Buffett has been, notoriously, anti-gold. He's, there's been just numerous times where he's just been, calling it, all sort of things under the sun, and not a big fan of it at all. And so now he has actually had a stake in Barrick Gold, according to the 13F that came out recently. And for those of you who don't know, I mean, by the time Buffett, probably owns stakes in other companies, by other gold companies, I'd imagine by now, because these are always 1 quarter behind. And so I imagine he's probably gradually increasing his stake, but it was only, $500 million, which, in the grand scheme of things of, Berkshire Hathaway is not, like a gigantic stake. But for someone that's been, always notorious anti-gold, it's sort of like Peter Schiff, if he were to come out and say he's, pro-Bitcoin all of a sudden, or he bought, some Bitcoin.
Well, Tim, it's like I actually watched a video. Was it yesterday? Of actually, there's a video back in the day, like him and Charlie Munger had their yearly update for their investors, and he said well, gold. It's the only time you can think of owning gold is when you're gonna flee America. That's basically what he said. And this is probably 20 something years ago.
Yeah, and a lot of people are saying.
I guess he's gonna flee the country. Well, actually, he has fake paper, shares, so it doesn't have the real thing. Stupid.
Well, he's really old, so one time he's gonna flee somewhere. I just realized I never hit the record button on this, but anyways, I can go pull this off of YouTube to get the recording. But yeah, anyways, it's showing. He was saying that sort of betting on gold is betting against America. So at this point, is Warren Buffett betting against America? And judging by what he said in the past, it seems so. But even a stop clock is right twice a day, and so it sounds like now he actually is worried about inflation. Did you see when he said that he was worried about inflation, and he never really thought that it would be a big issue in America? Did you see those comments, John?
I think I've heard him, but it's yeah, I don't know where or when. I think I always have my ear to the ground, but sometimes it just slips by me. But yeah, no, it's when Warren Buffett is worried about inflation, I should be worried about inflation most likely. The problem is that you started with like all these little helicopter drops of money that you had, right? And then now it's been more like you sending in a fighter jet, constantly like attacking a target, giving them money, like dropping money at them, like every month. And then I think like what's coming next after this is not working, like after all the unemployed people, they, still are unemployed after this Corona crisis is over. I think what's going to happen is that, they're just going to go in and carpet bomb the economy with currency. The Fed and the ECB and what do you call them? All the other central banks. So yeah, I don't know, Tim. I have a feeling that we're headed for some serious inflation, like actual real inflation that we'll see as peasants. Not stock market inflation that you've seen so far. Wasn't it today that was it the Dow or which exchange was it that actually set a new record high again?
S&P.
Yeah, the S&P, right? So we're back up at new highs. Everything is fine. I think we're gonna go probably quite the ways past it still, because usually it's October that you really get a good crisis that will start unfolding when it unfolds. So I think everybody's still on vacation. All the day traders are out there still, racking up a whole bunch of their savings into these into stocks or bankrupt corporations like Hertz and others, while they just don't understand what really is going on. And of course, there was a lot of people are into ETFs now. Like there's a massive uptick in ETFs. I looked at the recent stats from World Gold Council. Of course, there was a massive increase in just gold, not in bullion itself, but actually in ETF ownership. The problem is with ETF ownership, and I think we're in for some serious stuff. I saw that you posted a article there from I think it was from Sarah had something about ETFs.
I actually had it up on the screen while you were just talking, so it's like
yeah,
you read,
so let's
read her
go
mind.
into that and kind of like explain the current things happening with that, because we've been warning about this, paper ETFs. It's like basically like fractional reserve banking. You go to the bank and try to get cash, and there's not enough cash there to cover all the deposits, and it's the same with these contracts and the physical metal. So
Yeah, let's first finish up a little bit on Warren Buffett, and then we can go dovetail right into that, because I do have some quotes here from Uncle Warren, as people like to call him, not people like John and I, but it's people out there in general. But it's from a 1998 speech at Harvard. Gold gets dug out of the ground in Africa or someplace, then we melt it down, dig another hole, bury it again, pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. Then he also famously once said, "Gold is a way of going long on fear, and it has been a pretty good way of going long on fear from time to time. But you really have to hope people become more afraid in a year or two than they are now. And if they become more afraid, you make money. If they become less afraid, you lose money. But the gold itself doesn't produce anything." Then again in 2011, Buffett noted that for $9.6 trillion, you could buy a pile A of all the gold in the world, or pile B, the entire U.S. cropland, 400 million acres, plus 16 Exxon Mobils, and still have another $1 trillion left over. And admittedly, when people a century from now are fearful, it's likely that many will rush to gold, he wrote. I'm confident, however, that the 9.6 trillion current valuation of pile A will compound over the century at a rate far inferior to that achieved by pile B. And if if you're comparing it to all the farmland in the United States, maybe you've got
well,
a case over there.
what about stocks? What about paper stocks? You issue these stocks on just basically ownership of something. You don't really have the real thing as well. Like he comes from, the paper paradigm, I call it, where he hasn't really like seen a crisis. Like his dad was a big gold bug, of course, and he had seen, the 1930s, the crisis with the Great Depression, and what that did to people, and what ownership did at the time. And of course, they took that away from people back in the 30s and created a slush fund with it, with the confiscated gold. So it's just apparent that he always like will try to like he doesn't want fair. Like the problem is that he's an investor that lives on the paper paradigm, and if you get fair involved, like he doesn't really understand exactly what to do. Well, it probably will, which is trying to say that gold might have utility when it's fair around, when actually like the whole monetary system comes apart, and the whole thing falters. But after that, I don't know. Like I have a feeling Uncle Warren is up for some serious drops. When this is the thing, like some of the richest people in the world today are rich because their paper stocks, so their shares in their companies are at record highs, versus the printed currency. They're gonna just continue to rack up. We're gonna soon have trillionaires, Tim, potentially in the next decade. It might be a lot faster than we think if they continue to print all this money, but I think it's just a natural outcome. But people talk about it like that it's something that, oh, they gain so much wealth. The thing is, usually like people gain more and more money. Is not that they gain so much more wealth. It's that the currency, the things that they hold has gained value versus the currency that people gain more and more money. So that is mostly that and that's why we talk about investing too, Tim. Is a lot of times if you just hold like something that is not a company that's huge growth, for example, and you just see like the stock price goes up, well, it's actually because the currency loses value versus that same asset.
Yeah, absolutely. And just a couple more quotes here from Uncle Warren. Beyond this is 2012. He wrote, "Beyond that, the rising price has on its own generated additional buying enthusiasm, attracting purchasers who see the rise as validating an investment thesis. As bandwagon investors join any party, they create their own truth for a while." So, is Uncle Warren now one of these bandwagon?
You're talking about the Wells Fargo bandwagon?
Yeah, the Wells Fargo bandwagon.
Terrible.
Yeah. Speaking of Wells Fargo, he trimmed his stake down 26%, and Wells Fargo trimmed his J.P. Morgan stake down 62%. Also, trimmed a PNC Financial, M&T, BNY Mellon, Mastercard, Visa, and exit his Goldman Sachs stake entirely. So he exited his Goldman stake for some gold, and then also just
for gold.
Yep. Also, two more quotes here. Buffett in 2018 compared $10,000 invested in stocks and gold in 1942, which is the first year he invested in stocks. And he was saying for every dollar you could have made in American business, you'd have less than a penny of gain by buying into a store of value, which tell you to run to every time you get scared by the headlines. And in 2019, he said the magical metal was no match for American metal. So now it's funny that he is trading, American financial stocks to buy foreign gold stocks. So it's it's just these headlines sort of write yourself. But now going back to a headline over here. World's largest gold ETF continues to source more and more gold from the Bank of England. And just so you guys know, we do have a Discord channel. If you guys type in bit.ly/Tim John Discord. I believe that's all lowercase for Tim John Discord. Discord. And what John and I do is we save articles. Those articles then get saved right into Discord. And out of everything that I do in terms of what I am pretty diligent about, I am pretty diligent. Besides when I was camping off grid, I didn't have any articles for that week. But aside from that week, we're saving, just a huge amount of articles a day. Those are then getting archived, and John's a lot better about interacting within the Discord. We do have quite a few people interacting within that Discord, and just a great wealth of knowledge. But anyways, one of the things that we did share today, or I shared today, was saying that the gold ETF, the largest one in the world, that is the Spider Gold Trust, or GLD. They have right now, they've been getting, quite a bit. I believe from this morning when I was reading it, I think it was something like 6.8 or 6 point something percent of the trust was gold that they had bought from the Bank of England, of all places. And so, right now, they as a custodian, they use HSBC Bank PLC London as a custodian for its gold bars. And right now, I mean, it just would lead. I guess the big question I have is whether or not those gold bars are actually moving from the vault in Bank of England to the vault over there in London, which who knows, they're probably like connected or
Or it
something.
could be leased.
Or leased.
Just basically just share. Yeah, just basically you say that, oh, you could have this gold, but we're just borrowing it to you as collateral for something, right? So
yeah, and you know what? I mean, if you are, a lot of people out there are not willing to buy physical gold. They're not willing to, it's just even convincing some people out there, especially people that are, closest to us, because, a lot of us here are probably gold bugs, but, trying to convince, our family members, or trying to convince people that are closest to us, you're never what's the saying? You're never a prophet in your own village. So, it's, if you've got someone in your life and maybe, they're not willing to go out and buy gold, but maybe they have an IRA and they're willing to buy, a gold ETF. I think that's better than doing nothing, and it's better, and you're still going to get the price appreciation. It's just that when you finally want to get that, silver or gold in your hot little hands, the premiums on that is, pretty insane. So what kind of premiums are you seeing now, like on like an ounce of silver? Is that something you've checked out? I mean,
well, actually, I can tell you what I.
Oh, did we freeze, or did I freeze, or did we lose John there temporarily? It looks like we. Let's see here. It shows that he's still there, but I don't see him. So, anyways, while we're getting John back, just want to cover a little bit more with the Bank of England here, because it's showing right now that they are the lender of last resort, and so it just makes you wonder, like, to what extent is the Spider Gold Trust having to go to source their gold, and it looks like they're having to go to the Bank of England. And, they can't go to the Bank of Canada because Bank of Canada already sold all their gold famously or infamously. And, I think it was about like $200 an ounce around 2002 or 3. And John would probably know more about that. But we got you back, John.
Oh my goodness. Sorry, it's just my computer. Like my charging cord is a little bit trickier.
Okay, I was just making fun of Canada there for you. So I was saying that the lender of last resort for the gold seems to be the Bank of England, but it can't be the Bank of Canada because the Bank of Canada sold all their gold at like $200 or $300 an ounce. And what was it, 2002,
Yeah.
2003?
Yeah, and they used to actually have a lot of gold. They used to have 1,042 tons of gold. So it used to be a substantial amount. And when you look at, so like what I paid currently, which is, it's quite substantial because usually I pay like $2 or $3 spot per ounce, but I paid basically about $45 for.
You're talking Canadian.
Yeah, Canadian dollars for, and the actual spot price is $36.9. So you could see that there's almost a about $9 on the spot price, so it's substantial actually. There's not a lack yet, but I went through and looked at the products. There's definitely not as much products as there usually have been. So there is a lack of products, and of course it doesn't help that some mints are shut down because of the corona crisis and are not minting. I never really have been the guy that buys the actual maple leaf or the Krugerrand or the kangaroo, whatever you call it in Australia, from the Perth Mint there, or the Liberty gold or silver bullions, because I believe that the government could come around and say that, well, we printed it, we minted it, so it's ours. You never know what kind of shenanigans they're up to. So I always buy the private mints. I like Sunshine Mint is it's not as fancy as the quality from, for example, from the Maple Leaf, which is the best quality in the world, of course, but it's more than good enough for what it means are. It's supposed to be medium or exchange in a period of trouble, and of course, I couldn't care less about if there's 1 9 less at 0.999, and then it's 9999 for the other one. So
Speaking of which, rest in peace, Herman Cain, 999. No, yeah. I mean
yeah,
he did pass away, and no one ever talks about the fact that he was a Federal Reserve governor. They're always like, oh, he was the Godfather's pizza guy. I'm like, okay, what's more pertinent? Running CEO of a kind of shitty pizza place that I guess I had it when I used to live in South Carolina.
but you know what? I totally agree. I think a shitty pizza place is better than being a board of governor at the Fed, to be honest.
Yeah. Well, at least we actually dodged a bullet with,
Yeah.
not getting Susan Rice being Joe Biden's running mate, because I think she has deep Fed ties. Like I think her father was associated with the Fed, and she had something to do with the Fed. And anyways, but yeah, now we trade one tyrant for another with Kamala Harris. But anyway, that's a whole another topic that But lastly, kind of touching up on this the gold issue over here. It was showing that according to the World Gold Council's Spider Gold Trust Holding, that they had 70 tons of gold at the Bank of England on the 21st of May, and they had 70 tons of gold at the Bank of England on the 21st of May, and then 40 tons of gold at the Bank of England on June 30th. So, are they moving it out? And it also appears that that there can be audits twice a year of the gold at the GLD, but you're not allowed to audit the sub-custodians. So something like the Bank of England, you wouldn't be allowed to actually audit that, and then would then lead into, are they rehypothecating it out? Now, I mean, I do think, the GLD is probably on the up and up, and they're, because there's some like funds and ETFs that they don't actually own any gold, and they're just buying, futures contracts of gold, and that's probably...
Actually, Tim, there's a guy contacted me on LinkedIn. And he wanted me to, I haven't talked to him yet, but I will try to reach out to this fella. But he was saying never buy gold or silver, through your RSPs, which is the Canadian form of IRA. He's from BMO, he said, because they're crooks. They don't have the physical metal. Because basically he said that you can buy physical metal, through your RSP system here, through the different accounts that you can have. But he said that was fake, like that was a fake claim. He actually tried to get the gold and silver out of the bank, the physical, but he couldn't. So actually, he said that the only guys that have a program available is Silver Gold Bull in Canada, which I actually have bought, and I bought my last shipment now from yesterday of gold. So it just depends. Like, you got to really watch it when you invest in some form of paper, because if you don't watch it, you definitely don't have the physical ownership of it.
Well, I mean, a lot of people, like in a 401k in America, you're only limited to, like 10 different options. And maybe if you're lucky, one of them is a gold option. Or if you're in an IRA, there are ways to get physical into your, but then, there are, cost benefit analysis of everything. And I'm actually a bigger fan of, having gold outside of your IRA, just, you having it physically or personally. But, one of the tricky things is you can't have gold at your house in an IRA, and a lot of people seem to think that you can, although it's very, very clear in the IRS regulations that you can't do that. And so if you can't have it at your home anyways, and you're sort of relying on a third-party custodian, that in a 1933 type scenario, like when they took the gold, I don't think you'd necessarily be any better off, because the feds would just immediately go to these third-party institutions and clamp down. But I don't really think we're going to necessarily get to that point, because in 1933 you had a whole entire system that was based on gold, and international trade that was based on gold till 71. And then but today it's just much easier for them to print $10 trillion than it is to go door to door and put a gun to everyone's head and steal their gold. So I don't, but it'd be easier. But if they were going to do it, obviously, the GLD would be a pretty big target for them. A lot of these gold depositories would be a big target for them.
Yeah, and the thing is, like, every crisis, Tim, when you have a currency crisis, every crisis that I looked on, they ban gold ownership or use of gold or silver. during the crisis of a hyperinflation, for example, like Venezuela just did it, Zimbabwe did it, all the way back in France during the Libra hyperinflation and the revolution back there in the 1700s. And China banned the use of it at the end of its fiat, a couple of its fiat currencies as well. So they try to impose strategies to like force you to not use it. But of course, the general public doesn't. At that time, it would rather use gold and silver as a medium of exchange than these terrible currencies that have been. So it's it's a trade-off, and everybody should. And this is, of course, my opinion. I can't say that this is advice, but this is what I'm doing for myself, and a lot more than that. But the Wall Street guys, they say 5 to 10% of your base wealth should be in gold and silver. Well, in gold they say usually, but it should be it's just like a wealth insurance that protect you. And of course, we've seen lately with all the inflation and printing of currency, all currencies have reached new record lows in their price against gold and silver. Well, especially gold, of course, but so you see, like, gold is actually doing its thing. It's protecting people's wealth because it's protecting you against the inflationary supply of new currency that comes in. And we've seen that in old currency. But you made a little bit of fun of course, Canada and selling all the gold. I wanted to make more fun of Canada because the guy that me and Josh confronted at a liberal convention, which is he just he's well, actually he's not anymore the finance minister. He just resigned yesterday, Tim, our finance minister, and who knows who's going to be the next one. But he resigned because of some like speaking engagement. He got like $250,000 for whatever at a charity for kids that the liberals they were caught up in a whole bunch of other things. And he was also told that he also said that, oh, Justin Trudeau had nothing to do with my resignation. Justin Trudeau was involved in that too. He his mom spoke at the convention for $250,000. You can get like Ron Paul at a convention for under $50,000 US. So why would I listen to his mom? Maybe she would talk about how Justin, how she, Justin is
how she went to Cuba, to go birth him.
But it was for kids. It was a kids charity, Tim, and so just like insane that they charged $250,000 for speaking at a kids charity event.
Well, they spend like $50,000 on hot dogs and pizzas, and not to make.
But so what's really hilarious though, Tim, if you can show the viewers, I sent it on Discord, on your Discord, the article. You just got to pull this up because first of all, Bill Morneau sold the gold, the rest little bit of gold that Canada had. Then he attended Bilderberg. And now, of course, he is he wants to actually look at, another thing that he wants to do. And he wants to, chase the leadership of the OECD at the United Nations, of course. So, the more corrupt you are, the higher up, especially like when you're ultra corrupt, you end up at the UN usually and their organizations. And sure enough, he's going that way because he was caught with so much corruption here in Canada. So now you got to go to the ultimate corrupt place, which is, of course, the United Nations.
The UN.
So,
yeah. whose symbol outside their gates is a 45 with the chamber barrel wrapped up. Basically because they want to. I mean, remember like years ago when Obama was in there, it was all like the UN Small Arms Treaty and trying to hit the guns, and and luckily, I mean, America has been a standout on that. Even though Trump has taken some of the guns already, and hey, let's take the guns first and ask questions later. But yeah, I do have that article pulled up. And did you happen to see another article we have over here? Is this was from about a month ago, July 22nd. But Deutsche Bank's top credit strategist makes stunning admission: "I am a gold bug. Fiat money is a passing fad in the history of money." And this is Deutsche Bank's Jim Reed notes that this is a month old. So at the time, gold was up 21.4%, silver was up almost 20%, crude oil was down almost 26%, and he was admitting that he is a gold bug and says fiat money will be passing fad in the long-term history of money, which is a shocking admission for most financial professionals who are expected who are expected to toe the Keynesian line and also believe in the primary of fiat and its reserve currency, the U.S. dollar. Which did you happen to see that one? Did that one sneak by you, or is that something you saw?
I think I saw it, yeah, like way back when. Yeah, I definitely saw it. There's a lot of people that are coming out talking about how great actually gold is when finally gold did something. It was protecting your purchasing power. Everybody seemed to come out of the woodworks claiming the obvious, of course. And I just find it interesting, Tim, that it takes an event like that for him to actually talk good about something and actually tell the truth. But that's just the nature of these people. They got to make their money in between, and then of course they'll tell people at the latest possible time that they should get into something that they probably also made a whole bunch of money on. The thing is, like with all these banks and what they believe in and what they do, their system is so obsolete. For example, like this just shows you how insane and how terrible and how old and obsolete the transfer mechanism money is today. I was getting money from my dad's estate over here from my dad's credit union. So this is how so this will just baffle you, and like you couldn't make this up. So
And you're talking about Norway, just so people.
Yeah, Norway.
Know.
Yeah,
Okay.
exactly. Yeah. So the credit union in Norway. So to transfer the money, okay. So these are the intermediaries involved. So they got the Norwegian credit union got to transfer it to DNB, which is the Norwegian, major bank, the Norske Bank, it's called. It's the biggest bank in Norway. Then they actually transfer the money to Deutsche Bank. Talking about Deutsche Bank.
Go figure.
And then actually Deutsche Bank is supposed to transfer the money over to a credit union in Vancouver, which is supposed to transfer it to my credit union. So there's 5 people involved here on one transaction, of course. And when something goes wrong with that transaction, which it did, so the bank employee that transferred the money, I gave him, the sheet with all the information on, clearly states at the top to transfer in euros, right? But of course, neither him or the Norwegian bank managed to catch the big capital letters on top saying euro transfer. So they sent it in Canadian dollars. And so it's been a month now, Tim, a month and 3 weeks that the money has been stuck, and they're blaming, Deutsche Bank actually, because my credit union, they tried to talk to the other credit union that, but they couldn't talk to Deutsche Bank. And same on my side, like my credit union are talking to the Norwegian bank, but not Deutsche Bank. So Deutsche Bank is the 5th bank in the middle, like, and nobody seems to be able to get to them or get the information on both sides of the spectrum. And now they finally canceled it, but it might take, like, who knows? It might take another week or so. The money's still not back at my credit union bank, and then they wanted to send it through the same process again. And I said, no way, you guys are gonna send it in Canadian dollars this time. Because I had it work already. When a business in Norway sent it to me, Tim, it took 2 days on a business, wire transfer. So like that's how fast it should be. And of course, when something goes wrong here, there's so many cooks in the kitchen that, I just gotta laugh, and I like to crack jokes with these banksters, and they don't seem to like it very much when I say, like, well, I could just I wish I could just transfer it in Bitcoin. It would take me 10 minutes and I will have it. But I hope you guys can get to blockchain technology soon and like get rid of this obsolete, terrible system. And then they of course get mad with me and like they don't want to talk anymore. But you gotta poke fun up.
Well, the thing is, we're getting there, and then you're jumping ahead a little bit because we actually are going to talk in a little bit about central banks who are now trying to implement blockchain technologies. But one other thing I wanted to point out, if we go to the screen over here, this is Goldman's head of high frequency sales. If anyone had told you 5 months ago this would happen, you think they were crazy, and they're referring to right now. I mean, actually, right now, like literally right now, the stock market S&P 500 just hit a brand new intraday high. And so, I mean, just go back and like think about it. Like if you're going and talking, 5 months ago, you're saying, hey, country would still be on lockdown. Not that you or I or any of our listeners care about a vaccine, but that's one thing that the market kept going up on, all the hopes of these vaccines. But there's no vaccine, well, unless you count the Russian vaccine. But we can't have a Russian vaccine because we can't have Russians making money. It has to be Bill Gates and the big tech conglomerates. They're yeah, and they've got what is it? Half the restaurants are basically shut down. A huge amount of closed permanently, not just shut down, just absolutely just devastating.
Well, yeah, it's 25% of businesses, Tim, here in Manitoba that I live is not going to probably open up again. Like this is just devastating, but it was a natural outcome because it was a massive, business debt cycle that was driven, and it was a I believe it's like if you could call it a grand debt cycle, like this is kind of the end of the debt cycle because nobody could get any more debt. Everybody's indebted up to their ears. We can only go to negatives. So, let's go to negative and try to keep it afloat for a little bit longer. But the problem is, like, you got all these people unemployed that live on, now stimulus money to survive. And then what if you are not going to print more money, right? Like now we got all these people that are unemployed and that won't get those programs. Like here in Canada, our deficit exploded. Like listen to these numbers, Tim. Like this is scary numbers. Like the deficit was 30 billion, which was insane. I told it many times that it was like beyond crazy because it went from 3 billion to 30 billion, and now it's 300 and almost 400 billion dollar in deficit. And of course that's the time when the finance minister thinks it's a good time to exit when he racked up like tenfold the debt basically twice in his tenfold of the deficit twice in his 4 year 4.5 5 years that he's been finance minister. So it's not a good thing. And people were in so much, especially in countries like Norway, Australia, England, Canada, Sweden, I believe Singapore, Hong Kong as well. Everybody was very indebted. And the problem is when people are heavily indebted, I call it peak debt, when you basically, you can't raise your debt levels anymore because you can't basically afford to pay, even simple interest on it.
Unless you go negative, then all of a sudden you can afford it now.
Paid. Yeah, you can just sit there and just it'll pay itself down over 100 years, probably, with negative interest rates. But that's the way we're going. Like, there's no other way out of this than going into negative interest rates for a while. And they can only keep that going because then you distort basically all investments, bonds especially. Like, who's insane enough to buy any German bonds, for example? Now all of them are in negative returns. Like, hey Tim, I got a good investment. Why don't you and Kirk start to put your clients into a 30-year bond, which is like, I believe, like negative 0.10 return. That's a fantastic return to have. Like, meanwhile the real economy is having high inflation. It's just like, I don't know. And then everybody's piling into the stock market because that's the only place where you could actually get a return right now. And that's why you're seeing, everybody's just going in there. Wealth funds, everybody.
I mean, even I didn't even realize that. The 30-year German bond is also negative as well. I've got it pulled up on the screen right now.
That's what I just said, Tim. I actually, I still.
Oh yeah, 30. Okay.
Yeah, it's 30. All of the German bonds are negative yielding. It's insane.
Yeah, I just pulled it up, and absolutely insane. But let's see, we've got the three.
How right was I though? What is the actual what is the actual
negative 0.02 on the 30 and the 10 years in the 10 years.
So I was off 10 basis points.
In the 10 years, negative 0.46. But then let's take a look at the other countries too. We've got, at least on the 10-year side of things.
A lot of the
France, Netherlands, Switzerland,
even Italy, Tim. Italy, you can get negative yielding debt on a country that's basically bankrupt.
Bye. So the 1 month they've got negative 0.48, the 2 year negative 0.11, but then 30 years all the way at 1.9. And the thing is, what people don't understand is there's something called interest rate risk. So let's say you've got $1 million and you put it all into 30-year bonds. Rates go up 1% when the Fed or central banks lose control. That $1 million is now going to be about, because it's going to be about $700,000. Rates go up 2% because of compounding. I don't know. It's probably like, I'm just doing it off the top of my head. It's going to be like $400 something thousand. Now you'll get your $19,000 a year in interest, but after you wait 30 years and you get your $1 million back, your $1 million is going to buy you the equivalent of probably $20,000, which is like your interest payment. All the horses are going to be out of the barn, and you're going to be screwed. So I mean, the worst thing to hold in a inflationary environment would be a long-term fixed asset like a government bond, especially from a government that can't pay its bills, like the Italian government. It's just, and here I am looking at the screen and realized I had my.
But that's the thing, though, Tim, is like that's where everybody's been piling into these terrible bonds. They're stuck in 100-year Argentinian bonds, even. Like you insane. Like they actually invested. Like me and Josh did a video on it like 2-3 years ago when it happened. But Argentinian government came out with a 100-year bond, which is like the country that is a serial defaulter. They've had 8 debasements of their currency. Basically overnight, you lose 70 to 100% of your value of your currency, or they've been hyperinflating you. So like anybody that invests in a 100-year bond in a serial defaulter, but it was a good return, right? So
well, in any 100-year bond, just that one just particularly dumb, stupid move that somebody could make. But we do have a lot more articles that I wanted to go over, and let me try to find some of these over here. And so we haven't done a show in 2 months together, so some of this is gonna be a little bit old. But Fed officially blows the biggest ever bubble, and so mission accomplished over here with all-time high close in the S&P 500, which we're basically right at that right now. All-time low 10-year yield close and all-time high in gold pick. And so, here we go. It's just, complete insanity that, somehow they've been able to financialize the entire economy to basically get every metric that they want to get, while, the richest people in the world get richer, and, the average person out there is not really benefiting. So, I mean, and I do see, the president being, very tone deaf with this when, him and Pence are, out there tweeting out, I think even last night when the DNC debate was going on, they're tweeting out something like, NASDAQ at record high close. But guess what? The average person doesn't give a shit about the NASDAQ record high close. I mean, the average person has no money in the stock market, or they have very little, or they've got like $10,000 in, is not going to make a difference.
Yeah, or they got they put maybe $100 of their $1,200 paycheck that they got into the stock market.
But I mean, a lot of people had to probably pay off debt, and so and then paying off debt, while it's good for you as the individual, it's not good for the Ponzi scheme economy that is predicated on getting more and more debt, having everything going deeper and deeper into debt.
Yeah.
And one other thing that I wanted to touch on is not one other thing. We got a bunch of things, but 61% of parents fear remote learning will negatively impact their finances. So I mean, so even like just in a microcosm, taking a look at my daughters and myself, basically what's going on with us is we have to now pay a babysitter because my daughter's in kindergarten, so you get to start school and it's all this big excitement, except not because it's a school through fucking Zoom like we're doing right now, which is just idiotic. Then now we have to go hire a babysitter to then to monitor my child, so that way they can do Zoom. So that's an extra expense that we have. But but for other people, maybe they can't afford that extra expense, or maybe now they have to cut hours at their real job because they need to make sure their kids are taken care of, or what if their kids have special needs. And I'm not a big fan, obviously, of the public indoctrination system or the public schooling system, but at the same point, it's going to have in the short run a negative impact on people's finances. So I think it's good in the short run that people are starting to realize, looking into homeschooling and looking into alternatives that are out there. But it's got to have an effect on the economy when you've got all these people now who have to make these different concessions for their own kids, so then that way their kids can get I'll say education here in air quotes, because basically whatever they're learning in school is all BS anyways, and they're probably better off getting like different certification type courses, or maybe taking like a Ron Paul curriculum, or but hopefully this does get people, inspire people to think of things completely differently, because that's when it's just there are good signs with this, but in the short run I do see this is going to be a negative. One other thing relating to the stock market, stocks are overvalued on 17 out of the 20 metrics. Growth is a 6 sigma outlier to value. So a Six Sigma event. I mean, I don't even know like what the odds of a Six Sigma event are. I mean, it's like probably like a one in every like billion year type horizon. I mean, Three Sigma is what you've got like a 0.5% chance of something happening, and so Six Sigma is basically it's just when it'd be like it's snowing outside here in Phoenix when it's probably going to be.
Well, it's basically the same as the chance of dying of coronavirus.
Yeah.
Is the same odds.
It might actually be limited. Yeah, I mean, it might actually be less than the chance, which is the chance of that is pretty low. So,
Yeah.
maybe it'll actually say what it is. But I know before I was looking up some like a 5, 6. It's an event that we should never basically see in our lifetime, having this like Six Sigma outlier type event or
Well, yeah, yeah. Basically, Tim, what has happened is that the central banks are just pushing these bubbles further because nobody wants deflation, and that's also what Ben Bernanke in his 2002 speech that we talked about several times around the channel is. He said,
who
like,
also gets paid like $300,000 to give speeches, as we were talking about. People getting paid money to give speeches. Sorry
yeah.
about that. Yeah.
But it's like, yeah, you're basically like he said that the printing presses will always win over the deflationary pressures. So like he's basically saying that the solution is just to continue to print money, and that's what they're gonna do. Like it's pretty obvious, and nobody seems to think that was possible. But this is the Fed. The Fed is basically creating this rally together with all the other central banks, and but they're also starting to look at buying other assets that are going bad now. Like commercial mortgage-backed securities. Probably going to see the CLOs, as we talked about, starting to get bailed out as well very soon. Because the real estate is starting to suffer right now, the commercial real estate market, because people can't. Well, the businesses are not having enough people there. A lot of them are going bankrupt, and they're having smaller office spaces if they have any. So it's like a dine there, and then on top of that, they're in a massive corporate debt bubble, which is the CLO market, which is a credit derivative, of course. So you have like so many bubbles that are very close to bursting again, and then what are we going to do? Like the balance sheet is going to go up to like what, 10, 20, 30, 50, 100 billion. Where's it going to end, right?
Trillion.
Yeah, a trillion.
Yeah.
Is it going to go to a quadrillion when you print enough money?
So wasn't there like recently there's Fed governor statements saying that they're willing to let inflation run hot and they're willing to deal with extra inflation. And I was trying to find that article real quickly. I should have just went to my Evernote or to our Discord, but I didn't. But I found one that's like equally as hilarious over here, and it says from last June, can the Fed solve the global inflation? And so they're worried about inflation remains persistently below target in the face of solid growth and record low U.S. unemployment. Is there a solution in sight? And it's like, I love how like these idiots like think that this is like the number one problem over here is how can we get more inflation, because eventually be careful what you wish for. They're going to get way more than what they bargained for, and they're going to wish that they weren't trying to get inflation. It's just absolutely insane. And then one other thing I'm seeing now is stock buybacks are storming back, and here are the companies announcing a return to stock repurchases. And I know like earlier I was looking at this, and a lot of information technology, a lot of healthcare, materials, and financials are going to be the bulk of this. And if we go down looking at over here, MasterCard, Kansas City Southern, Linde Materials, Johnson Controls, O'Reilly Automotive, Kimberly-Clark, Schneider, Robert Half, let's see, keep CBRE, State Street, which is actually the gold Spider ETF holder, BNY Mellon, Google Alphabet, Sherwin-Williams, Northrop Grumman, Apple. And so what really pisses me off about this with Apple is Apple had they were also, we didn't get to do a show on this as part of the the hiatus, but you saw like when the Fed announced like their corporate bond purchases, and Apple was like one of the top 10 holdings. So why does a company that's sitting on I don't know if it's tens of billions or hundreds of billions of dollars of cash, probably hundreds of billions of dollars of cash, why are we subsidizing their bond purchases so that way they are floating bonds, so that way they can buy back their own stock? And I don't have the list pulled up, but I swear like half of the companies on that list of the top 10 bond holdings by the Fed, I swear like half of them were like not even American companies. It was like BMW,
Yeah.
Daimler Chrysler, which is now not an American
Mercedes, yeah,
company,
yeah.
Mercedes, I think Toyota. I mean, well, Apple is, but but they're one of the richest companies in the world. So why are they on that list? And it's just, very, for people that are in the know, it's just, something that really just, probably pisses me off, probably pisses you off, because it's a bank robbery. It's a transfer of wealth from, essentially these major S&P 500, Fortune 500 companies, where they now get to borrow at these extreme lows. While if you or I want to go out and get a loan, unless it's backed by the government, they want to charge us, 20%, even if we have good or, exceptional credit. And it's just what Max Kaiser talks about, this interest rate apartheid that is going on. And I guess I had one of these articles already pulled up here, so I should have just looked further in the articles I already had for today. And it looks like I got to readjust my screen over here. But it shows that I'm trying to do this on the fly, but the Fed is close to making its new inflation strategy official. And I don't know what they mean by close. I mean, I think they've already made that basically official, because this entire system is predicated on getting more and more debt. And so if all of a sudden the merry-go-round of debt stops, the whole system implodes, and so they have to just keep issuing more and more debt. But eventually, that's going to be like a snake eating itself, and we're going to see a collapse in confidence there, and that's why you're seeing guys like even Warren Buffett coming out and deciding that now is a great time to own gold. And I was going to go to you to see what you had to say about that. John?
Yeah, sorry you cut out there for a second. Can you just repeat that?
Yeah, I was saying that the Fed is reading an article here from Yahoo Finance where it shows that the Fed is close to making its new inflation strategy official.
Oh.
And, I don't know what they mean by, close to it, because it seems like they're pretty much already there, John.
Well, they've been talking about 3%. Like a lot of Fed officials, I heard that they talked about 3% target.
It's symmetrical now. So what they mean by symmetrical is, let's say it was 0 for a while. If let's say it was 0 for 10 years, then does that mean now it could be 6% for 10 years? Because averaging in a 0 and a 6 over 20 years gets you back to 3. And so that's something we heard them say a few years ago, is the term symmetrical inflation.
The thing is too, Tim, is that inflation target is so fake too, because they don't involve, for example, holding stocks or anything like that, or real estate. Like here in Canada, I looked at the CPI that we calculated, and they calculated the weightedness of housing costs in Canada on an average being 25%. Now the problem was that Manitoba, where I live, was one of the cheapest. They were 30%, and then you go to Vancouver and Toronto, was 75 and 80% weightedness. So where's that inflation target? Like 25% versus like basically where 50% of the people live, it was 75 or 80%. I don't know. Like I feel like something is completely and extremely distorted. And if you added the numbers of M1, M2, and M3, which is the different types of money, which is M3 is old debt. The U.S. doesn't count that anymore, but they were 10%, 11% inflation with those numbers. So basically, the debt has inflated 10% on an annual basis in Canada for the last decade. That was what I measured over the last decade, and that is actually inflation that hasn't totally shown up in the food supply and things that we need, but it's shown up in cars quite a bit, and the inflation is so that it's hidden because you pay the same for the car, but you have suddenly gone from 2-year term on the loan to a 10-year term on the loan, basically. So like it's hidden type of inflation that you don't really see of these things, and of course.
And honestly, if you can get a 10-year loan on a used car for like 2%, I mean, I think it doesn't really make any sense to pay it off. It makes sense to just get the cheap money and use that to buy either gold, silver, Bitcoin.
Yeah, it does make sense. But Tim, we're not talking about you and me here making sense for us, but it's the general public, whatever it can take for them to not having to pay more for a car, they'll do it, and people will take those like 5 till 10-year loans if they can, because it means that they will pay less in the interest and principal. Also the stock market, Tim, I just took a look. Like, there's actually been very little share buyback since March. Basically, that's when it stopped. But there's been a few actually, and there's
Well, it was a very bad political move to do it at the time when you're begging for money to then, take that money. So, let's just wait like 6 months, and then, all the sheep will forget and everything will be
but
good again.
yeah, but there has been some. Like in May, there was DHI Group did a 3.5% share buyback. So that's how many shares they bought back. That was 5 million. There was a 250 million from Logitech International on the 27th of May. Then the 10th of June, CBOE Group, which is a commercial real estate management group, they did a 2.3% share buyback. Then Synopsys Group did a 1.7. Sirius XM did 7.8 in July, and then recently was Quanta Services did a 7.2 million dollar share buyback. So there's been some, but it's basically stagnated down to nothing, and that's why because everybody has seen that the Fed is basically in there to bail out everybody. And so there's no need to really do the share buybacks to push up your prices anymore. So that's why you see massive stagnation in the share buybacks. They were very substantial, and a lot of them, I did a report back in October, and it's a massive list in my report that I called 2020 Global Risk Report, where I pointed out a couple of things that have happened and that are about to happen with the whole commercial debt side of things. The corporate debt is just insane, right? And it's gonna blow, and when it blows, when there's no more massive stimulus out there to keep them propped out, you're gonna have some serious ramifications coming in. But the problem is they probably will just keep on shoving in stimulus to keep them alive and keep these zombies alive until we're like 100% zombie corporations, and there's no corporations alive or nations that are ever going to be able to pay their debt back, which is, there's a lot of them already. There's 25-30% depending on the country. So they could keep on with this money printing scheme and buying up assets, but be like my the thing that I wrote 4 years ago almost now. The Fed will own everything to nothing. Like, what's your exit strategy, Federal Reserve? I called them on that like way back at that time. What's going to be your exit strategy? Just from looking at that was their current balance sheet at what was it like for $4.4 trillion at the max. It's like the Fed has no exit strategy.
Well, and if you think about it, and if they were to start buying back, if they were to start selling bonds as part of their quantitative tightening, which they were only able to do that ruse for less than a year, and they were only able to get it up to that $50 billion number literally for a month or two before they had to stop that. If that would then make interest rates go up, interest rates going up on a $4.4 trillion balance sheet would then send massive losses in the Fed's bond holdings, which if going up 1%, what you're looking at, depending on the duration of the bonds. I mean, you're talking about losing hundreds of billions of dollars. You're talking about losing to go 1%, you're losing like $400 billion like in one fell swoop on a 10-year bond. And so with the situation that the Fed has gotten, actually no, it'd be more than that. It'd be it'd be a huge staggering number, and
greatest number ever.
Greatest number ever. But then what would also happen is that the Fed usually would give back. They spin it as they give back 96% of their profit, when really, 94% of their profit, when really, which means they get to keep 6% of all the interest of all the debt that they get in terms of monetary gain and profit on that. But Mike, I had a question that got asked by congressman that then got asked to Janet Yellen, and I was like, well, what happens if rates do go up like you guys say they're going to go up? Then the Treasury would then have losses. Are you, instead of giving the Treasury a check, are you going to then give the Treasury a bill to cover your losses? And Janet Yellen said that my scenario is mathematically impossible. And it's funny because now all these Q-tards are saying Trump has nationalized the Fed, but if you actually read the statement, it said that the Treasury is in a first loss position. But wait, I thought the Fed couldn't lose money, guys. I thought that you guys were saying that I'm like a retard 3 years ago for suggesting what was probably going to happen, and she was saying it was impossible, and I'm like, excuse my language, like a fucking alien attack is technically possible, and yet not only is my situation not unfeasible, it's actually the most likely scenario of what's going to happen. And so how did I figure out that they'd eventually be in a position right around the same time as you, when you and I didn't even know each other, but we could figure out that they're trapped, that there's no way out of here. And a lot of my early podcasts, there was a song. I'm trying to think of the guy. It was Pink Floyd's lead singer. I can't believe him. David Gilmour has a song called, and unfortunately we can't play it here on YouTube, or because it will get taken down. Which the early videos on Facebook didn't get taken down, but it was called "There's No Way Out of Here." It's a pretty good song. So if you guys after this want to go YouTube it, David Gilmour, "No Way Out of Here," and basically that song I would play it a bunch of times, talking about Federal Reserve and central bank policies, because I'm like, there is no way out of here. They can tell you they're going to sell bonds, but okay, wait, great. They lasted 1 month. Oh, whoop-de-doo. You sold $50 billion of bonds either once or twice, and then the whole world started collapsing in Q4 of 2018, and then you had to completely go back and renege and everything. And then not only we're not able to sell $50 billion of bonds a month, at one point it got up to they had to do repos of $1 trillion a day, 2 days in a row. And so, and those were like 3-month repos too. And then it got to the point where, we don't even need to keep reserves anymore. And so you and I have been proven right, just, tenfold on this. But, I do want to switch gears a little bit because, we're already, about an hour.
But Tim, just one more thing. When has any Federal Reserve chair said anything right before a crisis?
Yeah, I mean, they all want to, hold Janet.
Very minuscule on that.
Yeah, they want to hold Janet Yellen up as someone that prognosticated all the 2007. But these
anybody
guys,
else, they come out like a week or two before a crisis happens and say like, everything is totally fine.
Yeah, everything. I mean, even Mnuchin was saying no chance of a recession in like the end of March or early April.
Well, which, Yellen said that there was no chance of a recession in a lifetime. She said that.
Yeah, and then Larry Kudlow, which he was right on this, was saying that rates would never be raised again in his lifetime.
Tim, I guess there's no recession though. There's the depression, so they kind of were right.
Yeah, we skipped it. Yeah, we skipped the recession and went straight to depression. Yeah, but, I mean, all those numbers, all those numbers are skewed. But I do, this is a very, very important topic. So we're going to switch gears now and talk, a little bit more about blockchain. But actually, this is more political, and it's showing U.S. Postal Service counters Trump's attack on mail-in voting with a new blockchain patent. And for me, they could have figured this out, years ago. I mean, one of the, early podcasts I did, went over the subject. And, this gets into the whole debate, is voting even worth it? Well, you know what? It's definitely not worth it if you don't know if your fucking vote is counted or if it can be. They have so many different ways to game the system. They have these something called fraction magic. There's a documentary by Bev Harris where she, lays this out. And actually, the first time I was ever on Ernest Hancock's show, which, you did Ernie's show today. I'll be on it tomorrow. I was on with Bev Harris, who is a liberal who is talking about different ways of how they can steal votes. But one of the ways, and this is newer, is they have machines where it says, okay, 49% of your vote goes one place, 51% of your vote, or maybe 50% goes one place, and then another 1% gets scattered to the third parties. But they can have the preset already configuration already loaded into the software to split your votes up. That way the vote tallies at the end all match up. That's called fraction magic. They can have dead people voting. They can have people voting multiple times. They can have hacking the machines. They can have we just had printed off 10,000 extra ballots and behind a locked door we shove in all these extra ballots that we just printed off. So many different ways that they can rig this, and not that it matters between okay, well, we got to pick Trump because he's going to save America and end the Fed. Oh yeah, by the way, he actually doubled the Fed's balance sheet and did all the worst things that I would have only feared somebody like Bernie Sanders doing. So I mean, at this point we're screwed either way. But I would at least we should at least have integrity to at least have an auditable system, which they could do, tomorrow if they wanted to. A lot of these machines, there actually are ways where you could go back and audit them as a citizen there to see if your vote was counted, but then they turn off those features or they delete all the, those features, even though they paid a shitload of money to get those. But, but through the blockchain, you can have it where you could be at home and say, okay, you got the long string of numbers, see that your vote was actually counted, how it was counted, and have a whole, auditable proof of that. But that's why I believe it was either Lenin or Stalin. I always get these two mixed up. I think it was Lenin that said it doesn't matter who votes, it's who counts the votes, and I count the votes. And so, here, all they need to do to rig this election is steal a few counties in a few states. And so can they steal? And what's going to drive me absolutely fucking nuts is all the people that think Trump is definitely a lock for winning. They're going to be, oh, well, he was going to win and he definitely won, but they stole from him. Yeah, no fucking shit. Obviously, they're going to steal. Can they steal from him? Yes, which means they are. And so Ernie used to say, if they can, they will. Now it's, if they can, they are. And so if you think that Trump has a 2% chance of winning and Hillary's going to, cakewalk this in to into victory, are you going to risk, if you're part of the deep state, or are you going to risk a felony to do retail fraud and encourage people to vote multiple times, or more retail fraud and get dead people voting, and more retail fraud and do different type of mail-in voting fraud, or more sophisticated fraud such as hacking the machines, or the fraction magic? You're probably not going to do that if you think Hillary's going to win anyways. Like, why are you going to go risk putting yourself in jail for years and years and years on something that has basically it was like a Six Sigma type event, having Donald Trump going in there and win, which to me it was awesome having defeating Hillary, but it wasn't about MAGA getting Trump in there if he goes in there and starts advocating all these liberal type policies. But that's my say when it comes to blockchain voting. All voting is basically bullshit anyways, but if you are going to vote on something, I would at least like to make sure that this bread and circus thing that we're doing over here with voting, that at least a vote is counted right. And so that was one of the things I thought Trump should have done first. I'm not Monday morning quarterbacking this. I was talking about it like pretty much from even before the 2016 election. I was talking about this, and what this is one of the major things they should do. I know Ernest Hancock, it's one of the major things that he harps on as well, and rightly so. But blockchain is here, it's here to stay, and there's are a lot of good potential use cases for that. And other potential use cases are, we see out of China is beginning major expansion of digital currency testing, and it shows that they're doing all sorts of different testing over there with the People's Bank of China. And I always love how it's People's Bank of everything, the People's Republic of North Korea, and the people. So it's like the more people and inclusive you are, this whole 1984 world that we're in. Okay, that was another Fed partnering with, you probably saw this.
Tim, sorry to interrupt you there, but how about going another step further than blockchain voting? How about the politicians' votes on the blockchain, everything that the politicians do on the blockchain? that would stop corruption pretty fast.
That would, which is exactly why it's not going to happen until all the horses are going to be out of the barn on that. But I'm sure you probably did see Fed partnering with MIT to develop hypothetical digital currency, and this is something that we've talked about a lot. And when they say it's no surprise why they have Coinbase's former one of their top guys is now the head of the Office of Controller Currency, that I believe happened on April 1st. So, and then even, and this is something you and I talked about, but the first initial stimulus bill was actually slated to give you like a Federal Reserve type dollar into your account, and what that was going to be so the $1,200 would be into this like basically blockchain digital wallet that would be basically a represented as like a dollar. And now that cash is bad, you can't hold on to cash. But then once they get you all on a blockchain, and they're probably then incentivizing you to get in a blockchain. Maybe they'll even say, hey, that money you have in a bank will give you an extra 5 cents for every dollar if you put it into your blockchain dollar, and boom, that's an easy 5%. I'll use easy in air quotes. And then eventually it's, oh, you didn't get your vaccine, so we're gonna ding your social credit score, but we're not gonna call it a social credit score because people are onto that, so we'll call it contact tracing or something else. And eventually, get to the point where, okay, we're just going to start stealing money from you because we've got enough of the slaves in here. And so now we've got negative rates. So we're going to incentivize, basically, force people to spend their money to get out into the economy. But it's all this social engineering and central planning that is going to ruin everything.
Yeah, and like if you take that a little further, you're saying that steal your money with negative interest rate. They've been talking like the Kenneth Rogoff's book, The Curse of Cash. He actually talked about doing a -5%, -6% interest rate. And when you're stuck in the banking system, and most likely this is not even like a real bank, like it'd be at the central bank potentially, where you have a direct bank account that they control, the Fed or the Fed itself, and you basically are a complete slave. And what happens is that as you're not doing don't get your mandatory vaccine and all this stuff, maybe you'll have to pay more of a fine. Maybe you have to pay 10% interest on a monthly basis because you're a bad boy or a bad girl, not listening to the grand government. So there's many ways that they could take this to a hellish 1984 way, which there's the technocrats out there, they want to do this. Stu P. McIntosh, one of the head banksters in the world, he actually wrote a article, no, a book called "The Redesign of the Global Financial Infrastructure: The Return of State Authority," and he says that the technocrats are wanting to do better control mechanisms, and they're doing that today. They created the whole G20 and the Financial Stability Board that creates all the laws in banking and central banking in the world, and it's only like about 20 people that actually make decisions for the whole world. And he liked the way that it was more dictatorial than the IMF, because they had 157 people, countries that had to vote on it. So then it's easier to make decisions when it's less people that could choose something, which is the total opposite of freedom. It's total totalitarianism. But they believe that it's just for the greater good of the people, because when you do that, and they are the masters. They've found out a way to do it this time, Tim. So there's no worries for us peasants that we would ever they're just doing it for our general good, and that they really care about us, Tim. So these guys, they don't functionally actually care too much about people. I think they just care that they want to have control over the world, and it's a natural innate thing in human beings. I believe that we constantly have to control people. uh, Talking about control and actually like the this whole system, Tim, that brings me to, if you can go to the general chat at our Discord. I wanted to show the people what I got invited out to by the Bank of International Settlement through the Financial Stability Board. It's take a look at this one. I don't know if you could pull it up, Tim, but it says "Too Big to Fail" consultation virtual workshop, basically that they're having, and it's, if you can see at the top, it actually is biz.webex.com, so it's actually a webinar. But it says underneath, though, I'm not sure if I actually will be invited, because it says underneath, "Thank you for registering. Your registration information has was sent to the host. After the host accepts the registration, you will receive a confirmation email that contains detailed information about joining the event." So I don't think how likely I am to actually be able to be on that Too Big to Fail consultation workshop. But that's what they're actually. So it seems like they're actually preparing now, Tim, for another, as I said, another wave of bankruptcies here. And when the economy really are stalling, when the wake up call comes that we're all so indebted, and this whole coronavirus was a great cover to basically steal from everybody and then leave everybody in the dark. And like I don't know, it seems like we're heading towards the second wave of tyranny, or a second wave of economic collapse, Tim. Just look at people are getting beaten in the streets in Australia. There are massive shutdowns there. You can't basically go out of your house, and shutdowns are just terrible for the general the real economy, because they shut down small businesses and people can't do their things. They're forced to lose their jobs, basically. Meanwhile, the Walmarts, the big corporations are still up and running, like Amazon and everybody else that are corporate welfare whores, and they are the ones that are winning, and everybody else seems to be losing to.
Winning. And I was just checking out the Discord for a little bit, and I think there's like 2 or 3 bots in there, like bots that we put in there to help things out, but we're if you don't count the bots, I think we're at 197. So we got 3 more to get us up to 200. That'd be a cool number to have, because we're not going to be on YouTube over here forever, and Facebook. These days I'm hardly ever even on Facebook anymore. Maybe I'll go and create, make some comments to piss some people off, and then dip out to then get blocked and see what the aftermath of that is. But aside from that, I'm not really wasting too much time these days on fascist books. So I need to start hitting up the Discord more. And the last article I see over here is just another one that shows the Fed says it is developing an experimental digital currency, which means when they say they're experimenting with it, means that they probably already have it, and they just want to make it seem like it's something that's down the road, even though the down the road is probably going to be a lot sooner than what you and I would probably think. not you and I as like the average person, probably not actually you and I, because you and I probably think this is coming a lot quicker. But you know, this is one of the reasons that John and I harp on this so much, is because this is really for all the marbles. Because once they get us onto the system, once they get people to accept the system, it's game over, and there's no, you know, putting Humpty Dumpty back together again. Once, you know, you're in the spot where they can just take all of your money and they can just cut you off, or they can make it so you can't even access the internet in the future. And so I don't want to give them any ideas over here of, you know, bad shit that they could do, because, you know, there's pretty much no, you know, end to, you know, the bad stuff that they could do. But at this point, you know, what I think I'll do is, you know, I'll cut the regular stream. So if you guys are watching this on a, you know, a podcast or something else, we are, you know, going ahead and answering, taking some questions here. But, you know, make sure to follow us on places like Float, on Library. All of our YouTube stuff will be back up now on Library automatically. I really feel like Library is sort of like taking like kind of like almost taking over from BitChute, and it's been around for a while. I mean, like Ernie's been interviewing Jeremy Coffin since going back to 2016, talking about Library, and it's one of the ones that sort of like dismissed it a little bit early on. But they do make it very easy to go straight from. Now they don't have any. I don't believe they have any live streaming features. So, you know, for that, you know, right now we are promoting Float.app, as well as you know, DLive for going live. You know, although I think DLive got bought by I think Justin Sun had some sort of part of that with Tron, and so they're not. I feel like they've lost a lot of their luster as well. You know, no pun on gold. But anyways, finding, you know, but you know, Discord is a place where, you know, you can see where we'll eventually be at, or wherever we're at, we'll post it there. So, you know, that will be a primary means of communication. You guys can get my free ebook by texting Liberty Advisor, one word, so no spaces, to 71441 to see exactly how they rig all these numbers. And what do you have going on, or would you like to pimp or promote, John? And
you can check, of course, everything that I do up at the economictruth.org, where you can find all my work, all the videos that I do, everything that gets put out, of articles that I do, and so on. Actually, I'm getting featured at something called Private Debt Investor with my derivative infographics, which actually the Discord users have had access to for a while to see. But you know, there's always people that are, you know, contacting me. I've become very popular on LinkedIn, Tim. I've been the #1, you know, trending article a lot of times on under economics, passing, you know, the Mohammed El-Arian and others there, great economists that are out there with my content. So it seems like, you know, the ideas are getting out there, and but please, check out everything at theeconomictruth.org. And of course, you could buy my book there, but you could also, if you want to support Total Tyranny, you could buy it at Amazon as well. So, but yeah, please help and support. And also for those of you, if I could also get help, because I am trying to keep up with, you know, there's a lot of costs to running this. And of course, another site that I'm trying to run as well is bankrun.org. Which I think that me and Ernie are getting ready, Tim, to put your whole dream into fruition there very soon. So you got to stay tuned there as well. But it would be great if I could, you know, get some help with some donations, so we could keep it up and running, and I don't have to spend all my personal money onto it, so we can have it, you know, as a running animal that, you know, are exposing, but also it's gonna be some fun things probably coming out of it very soon as well, Tim.
Yeah, and also want to give a shout out to Bitlord Dole. Zach has been helping us out a lot, where he's been taking these streams and reposting them onto my podcast feed, which has been, you know, gigantic help. And we've got, you know, some people helping us out in the Discord. But yeah, hoping to do more of these because, well, more than, you know, one every 2 months, because so much stuff is going on. But, you know, I was hitting it just so hard for so long, and, you know, talking about all the coronavirus bullshit for so long that, you know, it really does, you know, burn you out just talking about all this BS all the time. And so I needed a good, you know, 2 months to recharge with everything going on in my life. You know, you get a lot of stuff going on in your life. But anyways, it's good to be back. Love all the comments. Love, you know, all the, you know, I love the haters too, because, you know, your comments then, you know, help more the algorithms make more people see it. So thank you very much to all the haters out there. And love the haters. I know Trump at one point didn't he like for Easter, he's like, "Happy Easter to everyone, even all the haters." haters, or especially all the hella haters. But you know, he does provide us a lot of comedy. But anyways, I'm Tim Picciott with the Liberty Advisor. He is John Snyson, the Economic Truth, and together we are the Tim and John Show. But until next time, I'll see you guys later, and thank you so much for joining us.